All right, welcome back. Hopefully we can get through this. I'm in the conference room and people are doing a wine night outside, so good for them, but figured I wanted to go over Intel earnings and an update on how I was positioned into earnings and then how I'm going to kind of play it after earnings, because obviously if you're following this and have been following, big move after hours for Intel. So I want to go over that, go over a couple other positions and kind of, again, update how I'm going to view this and how I plan to kind of adjust and always have a plan. So that's kind of what I'm going to do. I'm going to lay out my plan. So if you don't know who I am, Ben Collins, CFA charter holder, founder, chief investment officer of Options Autopilot, which is an automated options trading platform. If you want more info on that, check out the description below and definitely subscribe and like if you like the transparency here and want to see more of updates on how I'm kind of trading one of my smaller account options portfolios. So let's just kind of dive in to get started, because if you have been paying attention at all, obviously Intel has been ripping. I've been talking about how I've kind of been managing my position around Intel in this account. And basically you can see we're up 9,000 year to date. This account is roughly fluctuated around $25,000, 25 to 30, just depends. I kind of move things in and out. But obviously that's a huge percentage and dollar gain for that size of account. And again, this is all educational purposes. Don't follow anything I'm doing. This is just a portion of my capital. But I just want to kind of educate and share my thoughts around risk management, because that's the name of the game, regardless of the amount of money that you're doing. I don't recommend YOLOing, and I didn't have to YOLO to get this result. And if you want more info on how I basically laid out this entire process over my video, so go look back at some of my older videos on my position and how I've kind of changed it. And I would say pay attention more to the risk management and kind of my progressive addition and subtraction from positions over time is kind of going to be more beneficial. So I wouldn't pay attention to specific names exactly, because it could be applied to any type of position. And I think it will help you over time, because I've learned this over decades of trading. And we're working on automating the kind of long position type strategies. Obviously, again, these are fully automated 1-1-1 strategies for MES, so futures options. And if we kind of go in year to date and look at some of these, you can see all the MESs are just fully automated trades. So we're up roughly $3,700 year to date. I guess we can go at Options Autopilot dashboard. So yeah, $3,800 year to date. This is only on automations in general. So again, P&L all time, that's probably from 2024. And like I said, this is roughly average 30 grand in this account. It's kind of tough to show the dollar weighted percentage, but you can just kind of see very high dollar and percentage returns just from automations. And some of that has been beta testing. But yeah, if you want info on that, check that below. So like I said, MES still working. Those are kind of I would say the consistent and more almost fixed income like strategies that we have. And this has been, through the tariffs, through the Liberation Day, all that type of stuff, still have that kind of return. And I'm just basically doing different days to expiration 1-1-1s on MES, which is the micro contract S&P 500 futures. But yeah, if you want more info on that, check out the optionsautopilot.com, and then you can check out my other videos. I kind of talk about that over time. But Intel, we can see up 9,000 year to date. I'm kicking myself a little bit, and I'm going to go over why it's both frustrating, but at the same time, I'm not too upset about it and how I'm going to adjust moving forward. Obviously, we've closed out a decent amount of this. You can see realized gain 68.51, and then this is kind of our unrealized, our current P&L open on Intel. This is a hedge for ES on my kind of automated strategies. So you can see this is down right now, but it's actually up year to date. If we look at ES, I actually made this amount of money on a hedge. So I've given up half of it, but again, the whole point of the hedge is just to have it there. I don't expect to necessarily make money, but it is nice when it does happen. So let's look at Intel right now. Obviously, this is not getting reflected, but you can see, previous to the release, and I'm doing this after hours. So right after, so this is April 23rd, 7:45. So they obviously released a few hours ago when market closed. And this is one of those scenarios where it's like you kind of feel like maybe this is going to happen, but you just never know. And I don't recommend speculating directionally over earnings unless you do it with spreads or you do it with straddles or strangles. So it's kind of non-directional, right? You're just betting on a magnitude of move. So we won't go fully into how they kind of price that out, but I think the market was expecting a roughly $7 move. If you kind of look at, at the money straddle, it would be called. So 630. So roughly a 10% move was being priced in, and they figure that out basically the at the money kind of option pricing here on the call and the put side. So almost a 10% move was getting priced in. So if you thought the market was gonna or Intel was gonna move more than 10%, it would have made sense to buy a straddle. And now obviously that would have proven to be correct because it is now worth $14, let's say roughly. So in that instance, you would have had a very high percentage return. Doesn't always work out that way. Usually they overprice them. But the way I believe it still works this way, not to get too detailed, but I believe they're typically pricing the at the money kind of earnings expectations off of kind of historical 4 quarters. So if for some reason moves have been muted, then you think maybe there's going to be an upside surprise or some type of outsized earnings announcement, that's when it can make sense to buy versus, if it's been big moves and then you think it's going to be muted, then it might make sense to sell options. In general, the tough thing about buying directionally into earnings and why I don't do it anymore really is the volatility collapse or volatility crush. So prior to earnings, I wish I had the think back version of Thinkorswim. I should probably pull that up. You can see IV rank has already dropped down to 32.9. So I think it's already kind of adjusted for the post earnings move. But you can see that these implied volatilities are still high. So what I'm going to do is probably post another one either tomorrow or weekend, and it'll show the change in volatility. And that's what people mean when they talk about volatility crush. And that's why it's very difficult to buy options going into earnings and be make profit even if you're directionally correct. So for example, let's say I had bought these 80 strike calls that are far dated. I'll probably make money on that. But for example, it's moved $14 basically after hours. And you would think because of this, I would get approximately an $8 move because the delta is 0.6, right? So we take 0.6 times the $14. That's roughly what it should be. But then what happens is volatility comes out. And so these will probably only be worth, let's say they'll only have increased $6, right? So it's not huge, but it still gives up a lot of your profit. And had it moved less, you probably would have then effectively been break even. And that's the tough thing with going directly. So how I'm currently positioned, I had transitioned this into a call spread, right? And if anyone recalls, I had hoped that the market would move up to 70, then I would kind of hedge it. I got a little bit too eager and kind of hedged it very early. Ideally, I wouldn't have hedged it at all, right? That's the, hindsight's 2020, but you just never know. It could have been that it's usually like buy the rumor, sell the news is another phrase, right? So it could have been that, okay, they hit kind of expectations, but it wasn't crazy better than expectations, so they would have sold it off after hours. What I think is going to happen is this could be a gap and go. I feel like it's going to come back a little bit. And if you recall some of these other ones, I'm sure that President Trump's going to go out here tweeting about how, Intel's hitting brand new highs. And that's what I kind of said, why I feel like this is for sure going to keep going, because there's going to be an opportunity for him. Again, not that he influences this. It's just more of I could imagine this happening and Intel hitting a brand new high since the year 2000 .com era. It is a big deal. Obviously, the market is anticipating then higher earnings, and it likely means that there's more upside from here. But I'll show you how I'm going to adjust this. So going into earnings today, I took off one of my short calls because I didn't want to be just like totally hedged if we got some of this. So my guess is, and we'll see how this is after hours, my guess is that this will jump to roughly $20 to $22. Because if we look previously, the market was at 66, right? And so this, if we kind of look at what would have been, kind of in the money by $10, it would have been these 55s. So my guess is it's going to jump to similar, but maybe it'd be 20, right? So that's kind of where it's like, well, the market moved a lot, but then this only gains, $5 to $6 of value. That's where you're fighting that kind of premium decay. These should help counter some of that because they will decay because it's finishing right at the money. And again, this was previously kind of an at the money dollar value. I'm going to guess it only increases to, let's say it's $15, right? Again, it could be a little bit higher, but we'll just see how it is. The good thing is that I have, one completely open call, so that will have gained probably, the $6 to $7 in value, so $600 to $700. And then the rest of it, I don't know, I'm just expecting to be up $1,500 to $2,000. Again, if it opens at $80 tomorrow. So if things open and then just keep ripping, then that's going to be interesting. I might actually sell one of my calls and look to kind of position this actual position for Intel. And the way I would do that is probably either leave the call spread on or reduce the call spread size and then sell puts. So my guess is that we go to the chart. And again, I don't know the future. It's just a matter of have a plan, trade your plan, because this is going to gap up pretty high tomorrow, right? And so my guess is at some point people will say gaps are meant to be filled. It could pull back. It might not though. So what I'm losing though is I don't have convexity, right? I don't have this kind of convex movement with the market now because my calls are very in the money. So one way would be I close it down, just buy straight calls again, but they're probably going to be pretty inflated because a lot of people are going to be buying calls. So my plan would probably be sell puts. If it starts to pull back, I will sell more puts. I'm kind of lagging into that put position. So that's getting me exposure to the long side and also giving me convexity because it should, move with gamma in my favor when I'm doing that. And then at the same time, I will basically buy calls. So I'm almost kind of like changing my position, but taking my profit again and trying to re-lever it to a certain degree. So if I'm up, let's say I end up 11,000 total on the year. If I really wanted to, I would probably end up selling some 60 puts. My guess is these will collapse down to $5 or $6. So I'll start to sell some of those and imagine I sold 10 contracts, then I'd have $6,000 of premium. Again, these are long dated, so it's almost like acting like long stock more so than, very fast decaying options. If I wanted to, I could go shorter dated on the short puts, maybe a 120 day. Just depends on what kind of premium I'd get. Again, these will probably collapse to $2 to $3. So my guess is you get $2,000 if you sell 10. I could then take that plus my profit and then buy long dated calls, and that's kind of what my strategy will be. And again, I don't know how the market's going to move tomorrow and how Intel will move after the open. Part of me feels like people could sell into this because they've gotten such a massive gain so far. But if people are underexposed and they need to buy the stock to get some exposure to these names, and I do think the story is starting to play out as expected, I think that this could move to $100 pretty quickly. And I kind of said that in a previous video. So I would just be very risk managed and kind of leg into it. And then as I have previously, I will add to the position as I'm up, but I won't if I'm down. So if I basically typically I start out with $5,000 and then add if I get up. But right now, since I do have a decent amount of profit and my year-to-date gain is about $12,000, $11,920, I have a decent amount of money to play with that's quote unquote free money at this point. So I still would probably just start out with a $5,000 position if I wanted to just keep this going and then add. If I really wanted to, I would maybe go 10,000. But I think that's a little bit reckless. Again, given the size of the accounts, we always want to keep that in mind. And that would be my plan for Intel, because we kind of had a pretty massive gain in SoFi last year and a decent gain in Intel, similar size account, kind of similar strategy. You can see currently down year to date, SoFi and Rivian. I had reinitiated these positions after I was down. I've only added to SoFi because it was up a little bit more, but I haven't added to Rivian because it has not been up since I re-added that position. So again, it's all about kind of what makes the most sense at the time. But this is kind of how you get some big gains. And obviously I cut my losses when it fell. So it's all about discipline. And that's why I'm trying to make this automated as well on the kind of long risk management side. So if someone wants to choose a position, they can kind of be like, okay, here's how you manage it. Because I think that in the long term is how you would make significant convex returns, right? Not just buying straight up calls, even though that can work and has worked, and that's kind of what we're doing. You always got to manage your risk no matter what you're doing, whether it's stock or options, and you definitely have to manage it with options for sure. So that's kind of my plan. Like I said, my guess is hopefully we open up and I'm up a couple grand on Intel itself. So we'll be at $10,000 or $11,000 here that we can then play with, and I can kind of reposition my strategy with Intel. And again, it's almost like I'm dollar cost averaging again after earnings, because I think even though this is a huge move, and it seems to just still be going after hours, it's definitely possible for it to pull back here, and people will start to take profits, because it's been, it's such a massive move going into earnings. If we look at this chart, that I think it's due for some profit taking, but like I said, market can do whatever it wants to do. What I would mention is I have a coworker, also a user of Options Autopilot, who, again, he was selling kind of calls and puts, strangles on individual positions. We don't have it on individual positions at this point, partially for this reason. But I don't recommend selling calls on individual stocks just because of these scenarios, right? I think it almost always makes sense to just sell puts. You don't really get rewarded by selling the call side, in my experience over the years. And so he's going to get hit a little bit by this move, and this is exactly why it's tough to kind of manage risk. If you're doing it, I would just close it before earnings. So that would be a lesson I would say for everyone to learn from his loss there, and I've learned that lesson over the years. I tried to let him know, but in general, that's pretty much it. Obviously, it's going to be gapping all the way up here tomorrow, and we will see what happens. But you kind of know my game plan there. Stay tuned. Like I said, subscribe. We want to get some updates. I'm trying to post more often and give kind of my thoughts and updates on the portfolio. Again, pretty good percent return on the automated side. It's obviously over 10%. And typically, I would also be having more money with SGov, so we'd be earning treasury return, and that's what other users are doing. They're earning treasury return plus the premium for the market. So most people, again, there's no guarantees here, and losses are possible, but most people are probably beating the market at this point for the S&P with those two things. So appreciate you guys watching. Obviously, again, stay risk managed. We'll see what happens with SoFi and Rivian earnings. I will update. So again, stay tuned, subscribe, how I'm going to manage these into earnings. I have less dollar at risk with some of these, so I might just let them go, because I think kind of expectations have come down. So I think there's a potential for upside surprise there. But in general, I would say, I guess last thing I'll touch on, market. It's hitting new highs. So I would think that there's potential that the market does want to go higher. Obviously, it's telling us that. And I think if there's even any kind of upside surprises in the Mag 7 or any of these big tech firms, given how large of a percentage of the market they are, then it's possible that there could be even more upside movement just because, they basically will move the market up when they move up. So I think Google has more upside personally. I think that Microsoft could have some more upside as well. So given that, yeah, we can kind of see it's broken to new highs, kind of pausing here. But I think if this kind of pulls back and kind of stabilizes, path of least resistance is higher because there's no technically resistance above us. So we'll see what happens from that standpoint. And obviously, I mean, these are kind of crazy moves, so you just got to manage your risk accordingly with that. So again, appreciate everyone watching, manage the risk, and stay tuned for other updates.